Today, we're going to talk about a bunch of things because we had a big moment happen here, which I'm sure a lot of people are asking themselves the same question I might be asking myself later today because baby girl woke up at 4 a.m. Are we going to crash? And we're going to try to answer that by looking at both sides and looking at some signals or some indications that we are going to see some kind of recession show its face. And that's what we're going to get into today. I think it really unlocks you as a trader to be able to understand how this thing could go higher, how this thing could go lower, and do we see signs that it is impossible to actually go make a new all-time high here? That's what we're going to talk about in the beginning of this video as we get into some technical analysis. We're going to bounce around to a lot of things, but the important thing is really paying attention to the signals and figuring out if this thing is going to head higher or how it can head lower. Let's get into it. Now, markets did experience this drop, and it does make a lot of sense, and we ended up back in our zone, which is something we were kind of looking for if we were going to see a little bit more of a pullback. Now, why did this overall happen? Well, it's because Fed Jerome Powell came out, and he said the economy is remarkably good, and there's no need to hurry the lowering of rates. But that's the important thing here, language, no need to hurry the lowering of rates. Did he say that he is not going to continue to lower rates, maybe at a slow pace? No, he didn't say that. So maybe we do have an opportunity for markets to actually head higher. Now, an important thing to understand with this is, do we see any kind of signals that say it is impossible for us to make a new all-time high here? You never really want to think like that. You always want to have that 1% chance, even if you are extremely bearish, that this thing can go to a new all-time high. And something that we can look for if we are going into recession right now is the 10-year, right? We can look at the 10-year, 2-year. We can look at the yield uninversions. We can notice that when these yields do uninvert, 12 to 18 months later, we do see that recession show its head. Back in 1990, we see that at this level a little bit quicker when that did uninvert. We did notice that shortly after that, in March of 2021, around that time, we experienced some kind of recession. We noticed around this area, yeah, a little bit wonky, but if you even take this little point right here where you crossed March of 2006, well, 12 to 18 months later, you actually did experience some kind of recession. So that's important to understand. And we see that little blip from 2020 where you did invert and uninvert very quickly. And shortly after that, you experience a recession. Do we see that right now for the 10-year, 2-year? We do. We see the uninversion of the yields, which tells us we have to be aware that there could be a recession on the horizon. We have to be aware of some kind of bigger drop in the market that can take place. But does that have to happen right now? Well, you have a period of time anywhere in there that you can see higher prices in stocks. And so what we want to pay attention to is, do we have those bigger reversal signals? As of right now, you kind of do, but not necessarily on the daily scale. We're going to talk about that further, and we're still talking about, can we buy ourselves some more time here? So one thing that you also need to pay attention to with these yields is the 10-year 3-month. And you'll notice this from the 10-year 3-month. It does have the same signals. A lot of the time when it does uninvert, it happens a little bit quicker. Have we uninverted yet for the 10-year 2-year, or for the 10-year 3-month? No, we have not. We have not, which means we have to be open to the fact that we could be buying more time here. There could be a way for us to base out and head higher. This is not saying to us that this has to crash down right now. It can, and we're going to go over those signals, but we want to first talk about on the SPY how this thing could head higher. And we are going to go into some shorter time frames today, but we're not necessarily talking about the weekly ranges. So if you want the weekly ranges, which is our 68% zone where we land 68% of the time. We landed outside of that last week, but it will be very good for finding those reversals around those levels. It is the best support and resistance. You can get those over on Patreon, but we give them out for free every single Sunday for the SPY and the Qs. And if you ask about them, we usually give them for IWM and the Dow Jones as well. This is very, very important because these are the best support and resistance that you can have on your charts. Now, what are we looking for in order to see some kind of upside move to take out this high and go make a new one? Well, weirdly enough, you don't have 2-hour signals up here, so you're kind of looking for just a simple 2-hour to swing up. And if that does just swing to the upside randomly, that can be enough to just take you above this level and go make a new high. So it's very simple. This is not anything that is overly drastic just yet. We're going to talk about how it could become overly drastic in a moment. The important thing that I think you need to pay attention to is this right here. If we are going to go into recession, if we are going to experience some kind of crash, some kind of bear market, this is the behavior you have to understand. And if while we talk about this, you're having a hard time understanding what we're talking about in these signals that produce these massive moves, which in a bear market, you're going to see bigger moves, which can really hurt you because in a bear market, they convince everyone to take shorts right here, and you notice all that money would be gone. In a bear market, they convince everyone to take calls right here, and you notice that can be a bad thing. It can really damage your account. So if you are trying to be less risky, if you're trying to really catch these moves when they are going to actually experience some good bouncing, you need to learn how to trade these. The link is down in the description for the technical analysis course. That is a full technical. It's really everything that I see as important in order to be successful in markets and really know how to understand when things are going to bounce, when things are going to drop. So that's important. This is what we are looking for right here. That's why we're talking about it. If we see signals like this, that will be a dramatic divergence. Look how dramatic this was. Now, at this time, before we saw this massive move, we were thinking, hey, yeah, this is going to bounce. I'm going to sell my volatility. I'm not taking shorts on the market. I'm not taking calls on volatility in this area, but I'm looking for that reaction to the sell zone. If we reject, then we might see a stock market crash. None of that happened. Instead, the thing that I mentioned that everyone seems to ignore is the fact that if we get above these levels, we are most likely going to see a squeeze. And we actually did see a squeeze, and we had a signal that said this is dramatic 30-minute divergence. This is dramatic 30-minute divergence on the MACD and RSI at the same time, and that gapped above our entire sell zone. What happens to a sell zone when you get above it? Well, a lot of the time you want to retest into it, and then you can use it as a buy zone. So if we are going to hold up, say next week, and we're not going to curl down weekly charts, which we're about to talk about, you could see us use this zone to make a very similar signal to right here. This is what you need to understand. If you have a hard time understanding these things, 30 minutes are important. Dailies, 2 hours, they're important, right? They're great. You have to know how to do those, but those see less crazy things more of the time. The 30 minutes shows up way more often, and this will really give you good hints of direction and help out your positioning throughout your trading. Okay, so I highly encourage some learning this weekend because you do have time. I believe the 10-year 3-month is telling you you do have time, and I think we most likely will see some kind of Christmas rally. I think we will most likely see some kind of Santa rally. I think that will happen just because I think it doesn't mean it has to happen, but now you know what you're looking for is basing out signals in our buy zone. If we are going to head lower, well, that would make sense. We would just be in a daily pullback where you're going to see this daily able to cross down, and maybe we actually end up at lower levels before we're able to actually see some of those basing out signals and head to the upside. We want to be aware of those moves. If this is going to be some kind of big crash, if this is going to be some kind of massive, massive thing that extends for a year or something like that, or we go into a bear market for an extended period of time, well, this weekly, first of all, will cross over. But is this overly negative? Is this really, really close to the center line for the SPY? No, it is not. It is farther away from the center line than you would like to see that go into a negative trend. You notice the last time we curled down from below where we are at right now on this MACD, what ended up happening? We actually curled up into positive territory. We saw that get down by the center line, simple swing trade to the upside. And this is where swing trading is very, very beneficial, right? Keep it simple. This crossed up on a weekly chart and boom to the upside. Right? If I don't like those shorter time frames, I can be accountable and be responsible about and just tell myself, hey, I'm not good at trading those shorter time frames. I can open it up to a weekly and just use these to invest. And we noticed that this was a great time to buy for the weekly chart with a simple swing trade. Now you are seeing the opposite of a good signal for a simple swing trade. So be cautious because this can end up in one of our buy zones. And that's why we have monthly expected moves over on Patreon for you. And we give them out on YouTube. So these are the things that we want to pay attention to. Is the weekly crossing down here? Because you notice that these divergences here were flat. That produced something bad. These divergences have now become more significant, and that's important to understand because if this does drop, it does mean we could experience deeper prices. So the weekly chart's going to be very important, and that's why next week I would really like to see us maybe even hold up. If we're going to experience that corrective move, then maybe we end up turning this down for a bit of time and we curl back up into positive territory for a simple swing trade like the last time. These are just ways to be open to upside. Okay, these are ways to be open to upside, looking at 30 minutes, looking at 2 hours, looking for those little signals, and then looking at the weekly if we're going to experience a bigger drop. If you're going to experience a bigger drop, and that's just going to be a corrective move, you're going to see a weekly able to turn back up into positive territory. That's important to understand. Now let's talk about this is kind of starting to talk about the other side. The weekly, you really have to be open to this next part if we're going to see some kind of extended crash, some kind of bear market right now. That would be the monthly chart. I want you to notice this monthly chart at the level it's at on the MACD. It tells us one thing. This is bad, right? This is almost the same level as before. You actually have this pretty much flat across the way, but I want you to notice this was pretty significant. But this right here is very significant. You are down from that level, and you are barely overbought at this point on the monthly. If this crosses down, you want to be aware because you're most likely in a bear market at that point, and that's why you need to understand you might have some time left. But if this monthly crosses, you don't have time left, and you have to learn how to find those little 30-minute signals, or that market will eat you alive. Bear markets are built to cause the most damage to all traders. Okay, to everyone, to traders, to hedge funds, to everyone. It is built to do that. They want to suck as much money out of the market as possible, and that's what I believe they are going to do. I believe we will behave a lot like this. We talk about this area in the course a lot. We talk about Apple a lot throughout this area to find those signals, and that's important, and those are the things you have to understand. So if the monthly crosses over here, this is your signal for extreme weakness. I wanted to talk about the Qs for that signal because I think the Qs will suffer even more than the SPY if we get this monthly to rotate down. Now that could rotate all the way down and we could curl right back up into positive territory. But I want you to notice something about this drop. We curled down from a similar area. Now you're seeing that slightly down on the MACD and very significant on the RSI. So if we end up crossing here and we break this channel, it's not going to be a good sign. It's going to be a sign that this is going to extend to the downside for a long time. And if we do extend to the downside, well, this curl over did not have really good divergence or anything like that, not on the MACD at the same time, flatness across the way for the RSI. So it did have it, it just wasn't on the MACD at the same time, and it was rather flat on the RSI. Now you have it very significant. So if you cross over on this monthly, well, this time you dropped by about, I think it was about 37% before you were able to base out. Okay, now you have weakness in momentum. So what does that mean? Well, if I'm going to go down, I could go all the way down 42, maybe even 50% over time if this was to take place, if this momentum means anything. And then you want to be aware if that monthly is able to turn up at any point for the simple swing trade, because that is the time to invest. So is this the best time to invest? Technically, this would say this is the, once this does cross, that would be the worst time in history to invest for the next 12 to 24 months. We still pay attention to the shorter time frames. We know the stock market does crazy things. It does not mean we can't make a new all-time high. We already talked about these shorter signals. Do not forget both sides. Do not just take into account the fact that we're saying if those bigger time frames do cross, we can see a crash. Sometimes you get the basing out signals, and that's why you have to understand how to find things like this. And we're going to talk further about signals like this that gave us a hint for this to drop. And then on Sunday, we're going to go even deeper into these shorter time frames. We're going to give you those updated weekly expected moves. So thank you so much if you want to subscribe to get that info next week. And I meant to say get that info for next week. We're going to be giving that out on Sunday, but we do see a big drop here. So did we have hints of this drop? Well, if you remember 2 days ago on YouTube, we like to tell people it is good to pay attention to multiple stocks, because if you pay attention to stocks that are in the queues, right? If I pay attention to stocks that are in the queues, I can get a hint of what those stocks are saying they're going to do. So did we get a hint that this big drop was going to come? And you notice that 2 hours still by the center line. What if that just whips back around and all this is a blip? We'll pay attention to that for you this week and get you those weekly moves. But did we have a hint for this to come? Well, we did, and we mentioned it with Amazon. Amazon showing extreme weakness on the 2 hour, and we noticed that the 30-minute was not able to curl back up at any time. So that means the management of the trade, right? We teach you how to manage your trade if that thing is going to cause you to experience a big loss. We teach you how to get rid of those. We teach you how to really react during the trading session so you don't get hurt by that in the course. But we noticed that we had major divergence outside of a monthly expected move. We went up to a monthly expected move here, and we experienced the divergence that causes the weakness and momentum that says something bad can happen, something bad happens, and look at that. This is what you need to understand, because you might have some time before we go into recession. So why not learn how to find signals like this? Because markets in a bear market are really, really good at convincing people, hey, this is where you should buy calls. This is where you should buy calls. This is where rug pull. Okay, they're very good the other way. This is where this is going to tank, this is going to tank, this is going to tank, curls back up into positive territory with a divergence. That will pop up a ton of time, and I highly encourage, if you're not understanding this, to take that technical analysis course, the full technical analysis course down in the description. I don't flood it with a bunch of useless information. Every single thing you learn in there will be useful for you to some extent. Right? It will be very useful to understand, especially when the bear market shows its face. So just be aware of that. We're not talking about the bear market happening right now. I still think that this market does have time to head higher because of that 10-year 3-month. So let's understand that. But this gave us a great hint. Did we see another hint out there? It was Google. And we mentioned this multiple times during the live stream. Yes, this could be some kind of cup and handle, but watch out because you have a little divergence here and you have triple divergence across the way. We notice that that divergence is very significant here. We notice that that divergence from right here is significant there, and it got more significant. So you have triple divergence on the MACD, triple divergence on your RSI here, saying there's major weakness. And if we get some bad news, that can flush. So Google was telling you that this could flush, and it did. And this is the exact behavior that you have to understand. Because we're doing it. We've been behaving like a bear market with volatility for quite some time. We kind of got rid of that in the recent few days since the election, but you notice that it's still there. The volatility is still there. That's why it climbed up by 20% at some point on Friday. Okay, so these are the things you have to understand in order to trade in those markets. And now we need to understand how this thing could bounce if we create those signals in the other direction. And that's what we're talking about in the beginning of this video with the SPY and the Qs. The other hint we got was volatility, right? Volatility gave us that 2-hour divergence, and it wasn't at the same time as the SPY. And that's the main thing that is leading me to believe maybe we do end up actually heading higher. Maybe after a little bit of time, maybe we base out, we actually do head higher because you do not see those signals on the SPY at the same time. And that is very important to understand. A lot of the time, these tops add up to, you see a signal on the volatility and you see a signal on the SPY at the same times. And the Qs cannot make that high while the SPY does and creates that divergence. That's why we're paying attention to the SPY and volatility at the same time. But this did give you a hint that it was going to pop. You see the 2-hour divergence down here on the MACD, very significant. You see that down here on the RSI. It got more and more significant as it progressed. So that was something big, and volatility came screaming in. So we shouldn't necessarily be surprised by the fact that we experienced some kind of drop. And we're in a buy zone right now, so we'll see what happens. Now, does volatility have reversal signals? We're going to get more into this on Sunday when we do have the weekly expected moves. But right now, it's just saying, hey, volatility could pull back. Maybe we experience that bounce, which is exactly what you want to see, because we saw the SPY coming down, touching our buy zone. If we get some kind of pullback in volatility and a bounce in the market, and then that fails, we might see that divergence pop up for the SPY. What would that mean for volatility? Well, maybe that drops off and then that spikes again and we see the opposite signal at the same time from the SPY. This is what we are going to pay attention to. And if you need to understand what all of this means, that course is down there. It's 90% off for until November 31st. You do not have much time left, and you do have time to learn. Okay, you have time to do this over time. I think you do have time because that 10-year 3-month. If you don't, you're going to see those monthlies cross over. And that's when you're really going to want to learn fast, because if you're trying to trade in this market, in a bear market, you have to understand they are going to tell you the exact opposite times to buy calls. They're going to tell you the exact opposite times to buy puts when it comes to the mainstream media. And that's something you've got to understand this weekend. One reason that I do believe we can actually base out soon if we see a reversal signal on a lot of these indices, like here on the MACD, if we can see that, going forward, maybe we just V-shape, but if we can see that going forward, that would be a great thing, because the Dow, even though, and this is the DIA, and we have the weekly expected moves for last week up, and you'll notice that the Dow not necessarily doing something crazy. So that is very interesting, because the Dow is the one that gave you the 30-minute reversal signal. Once again, if you don't understand that this means extreme weakness, and that never curled back up on the 30-minute chart until right here, just for a couple of bars, and then it curled right back down right by the center line. If you need to understand that kind of talk as well, we go over that. We go over thoroughly the center line for the MACD. We teach you how to actually utilize this, what you actually need to know. Knowing what MACD stands for is just great. That's great. Plenty of people probably have on their courses like a whole 20-minute video on all that acronym. But how do you actually utilize it? And you utilize it by finding weakness and momentum. You utilize it by finding the swing trade. You utilize it by understanding the center line, and that is something we go over thoroughly in our course. So I highly encourage that, as it is the last sale that we're going to do at this price. And if we go higher and we go higher into 2025, you're going to pay more money for that course. And I don't want you to have to do that. I know I'm selling a course. I know I make money off it. But the reason I'm really pushing it today is because we are seeing that we may not have much time left. So why don't you learn while we have time? And then you can really benefit from a bear market later on with those bigger swings. Right? I've gotten email after email after email of people saying how much I have changed their trading for the better. And that is a fantastic feeling, and I want that feeling to continue. If I do not continue to be helpful, I will close down the channel. That's how I've always said it. My whole goal here is to be helpful. If I am helpful, then I will continue to put out videos. Right now, I'm getting multiple messages that, hey, you're really changing my trading for the better, so why would I not stop trying to be as helpful as possible? Pay attention to both sides is my thing here. If this pops up, and then we hit a daily or a weekly expected move, and then we pop down, and then we see this type of signal, that can tell us, hey, there is divergence here for the MACD, and we're going to end up curling up that 2-hour, and all of this that people are screaming crash, screaming crash, screaming crash could go away very quickly. If it is going to escalate, we are going to see weekly and monthly charts start to roll. And that's all you need to understand going into next week. Traders, it is very, very good to trade like water. Something I say a lot on this channel is trade like water. I even have a sweatshirt that says it, because trade like water tells me I need to be aware of both situations. Even if I am very, very bearish, I need to give that 1% chance that I could be wrong, that this thing could head higher, so that I'm open to seeing these signals. I am open to saying, hey, this could head down. This awesome move here could head down, right? I'm sure a lot of people are like, it is impossible for the Dow to fall down here. And then we see a little divergence and we go, it's not impossible anymore. You can curl down. And that's exactly what ended up happening. So be aware of these type of signals. And if you're not understanding these, take the course and then come into our chat live, right? We don't just leave you. We want you to ask questions, and people come in from the course all the time and ask questions, and I answer them live so that they can understand it better. And if we still don't make ground on that, I say, send me an email. I will email you and see if we can figure this out so you can understand it better. I want to really be helpful. That is the goal of this channel. And thank you so much for subscribing to this channel, because we can make more people aware of these type of signals before a bear market begins. And the more people that are aware of this before a bear market can really stop giving money to these rich people and start making money in their pocket with these markets that are definitely rigged. Here is TLT, still wonky. It's been wonky for quite some time. Data has, but you notice these pops are coming in. These pops are coming in. We've started to get tight again. I understand this has been a drawn out thing, but the understanding of this is you're building and building and building and building. There is a big reaction that's coming. That could be in the upward direction. Will markets see lower rates as a good thing initially? Will this curl up on a 2-hour and say, hey, I'm going positive, therefore I'm going to see some good stuff? Right? Will all that happen? Because TLT reacting up could be a good reaction from the market initially, but end up being a bad thing for markets over time, because we saw how the uninversion of those yields is actually a bad thing. So if we see that 10-year 3-month uninvert, because maybe TLT catches some ground here, which will go into the shorter time frames actually on Sunday, you can see that the daily has crossed up. We're starting to cross back down. You want to be aware that can head lower, but I think TLT is still trying to base out here. I think you've built liquidity for a long time, and we're about to see a reaction to go back into a positive trend, and people might see lower rates because this is TLT. It's the opposite of, say, the 10-year yield. So therefore, the 10-year yield, which you see the same signals on the other end, might end up coming lower. Well, people could see that as good news initially. That can make people, do things all across the board, like say go back into trying to buy houses and things like that because of the lower yields, the lower rates they can get. And that's what you need to pay attention to, is the fact that this could react up, and the market could react up initially for quite some time, right? We still have some months maybe this could happen. But at the end of the day, when those do uninvert, something bad is around the corner. And I want you to be aware of how to trade in that kind of market. So the main takeaway here, guys, is we really have to understand how these markets move back and forth and how momentum really gives us those hints, because we got a hint here and we saw a big move. We got a hint from Amazon and Google up here. We saw a big move. So these are the things we want to be paying attention to in markets. We have NVIDIA earnings next week. That is a 50-50 flip. That's why we're not going to talk too much about the technicals there, but it is showing weakness in momentum. But that can easily save this market if it experiences even a bigger drop, maybe on the weekly scale. Maybe we start to drop to lower levels and then NVIDIA earnings saves it, right? It's a 50-50 flip. They could say one good thing and 10 bad things and the stock goes up. They could say one bad thing, 10 good things, and the stock goes down. So that is something I want to pay attention to going forward. Are we actually basing out to give us that signal that we're going to head higher, or are we going to confirm the bigger signals down, saying we're about to see an extended move for maybe a correction, and if we cross over that monthly, we could end up in a bear market, a stock market crash in the form of a bear market. So we're paying attention to both sides, and that's the answer to the are we crashing thing. Everyone wants to find out if we're crashing. Just let the signals tell you if you are. Right now, you have no indication of that crash actually taking place. This could still just be an overreaction. This could still just be a bigger pullback to get into our buy zone, make those basing out signals and head in the upward direction. We are going to follow these stocks with you all throughout the week live. So please join our live show. Dedicate yourself to some learning this weekend. It is 90% off until November 31st. So get it while it lasts. And I just hope you guys have a great weekend. Have a great weekend. Make sure not to just stare at charts all weekend. Go do something fun for yourself and go hang out with family, friends, do all that good stuff. Go enjoy a beer, watch some football. Do what you got to do to reload, and then come back on Sunday night, watch our YouTube video so you can get those updated weekly moves, and we'll go into the week strong. All right, guys, thank you so much for watching. I really do appreciate it. I hope that this video was genuinely helpful to you. And if not, come to the live video and ask me some questions. I highly encourage that. So thank you guys so much. Hope you guys have a great weekend. Peace out.